Did Christmas just come early? Well, CPI report today sure gives us a rate present that we're going to talk about in detail. Stay tuned. November 10th, a day that, well, I've been looking forward to as far as data goes. This is Andy O'Fee, the Yankee closer from Crump and Community Mortgage, your certified mortgage advisor. And wow, what an early Christmas present that we got in the rate market today. The Consumer Price Index report, which we talked about yesterday in a blog, came out today, and the number came in lower than expected. Now, this should not come to you as a surprise. It really didn't come to me as a big surprise because we had talked in the past in regards to where the inflation reports were over a year ago and what the data that was coming out in the next few months was going to replace. Higher numbers being replaced by lower numbers today, and in the next few months will show an annual number coming down. So we're going to dig into these numbers. Please just take a few minutes to watch this because you are going to have some very, very cutting edge material when you're out there talking to your family, friends, and most importantly, your clients, getting a better understanding of what's going to happen going forward with the rate market. Let's take a look. So today's number came in, the core number is really the big number, came in at 0.3%. And even though it was up 0.3, the overall year-over-year number dropped. We're going to show you that chart in a little bit and explain what happened. Now, what's crazy about this number is that even though the core number was down by 0.3%, the shelter number, which constitutes about 39% of the overall CPI number, was up 0.8%. Rent was up 0.7%, and owner's equivalent rent was also up. The year-over-year number, 6.9% for shelter. But why was this number up so much, but the core number only up 0.3%? Well, it goes to tell you that a lot of the other components within the report were down dramatically. But the lodging away from home number was up 4.9% in October. Let's take a look at that chart because this is crazy. Look at this up and down, up and down, up and down scenario. And in 2020, which is basically when COVID hit, no one was going away from their house. Then all of a sudden we start to see these high prints. And the most recent number that we got in October, wow, what a spike. So had we received a number like we got back in the beginning of this year, that CPI number could have been down even more dramatically, helping the market going forward. That's just an interesting component of this number that you all need to be made aware of because the headline number everyone is going to look at. But this number shows you that the CPI number could actually be better than what it actually is had we not received a high lodging number away from home. Now, this is the chart that I love and I share with you very, very often. Now, I had told you that the summer months, when the Fed started doing their thing with the Fed hikes, we were going to go through a couple of very difficult times. Look at the prints that we got from July, which was a match, but August and September numbers replacing lower numbers from last year. Now that it's all flipped over, now we're going to start replacing some of these high prints through the fall and the early winter with some lower numbers, hopefully driving the number down. Let's do the math. Year-over-year number last month for us, September, was 6.6%. The number dropped by 0.3%, and overall, the core number dropped to 0.3% down to 6.3%. Now, what does this all mean going forward? Going to be a question all in your minds. Number one, if you want to talk about rate with me, you got to call me. You've got to send me a message, and I'll discuss with you directly where rates are depending on a loan program. I'm not just going to throw a random number out there because that is not accurate and it's not legal. The second thing is, well, where do I think rates are going to go going forward? Now, that's an important question, and I can talk to you about that right now. I believe that we will continue to start to see the Fed's actions really start taking a hold. Now, the December 14th meeting, after this number, they're not going to go 75 basis points. I just don't see that happening. A 50 basis point rate hike, because we're basically not out of the woods yet when it comes to core inflation. They want to get inflation back down to the 2% number. Now, we'll take that number where it is right now. But as I'd mentioned, we're not going to get lower rates officially by the end of the year, but we're going to be trending that way, I believe, And I think by the middle of the first quarter of next year, we could see rates get down to between 5, maybe 5.5. But I think that range is going to be where we're going to sit when we start the year off. And the great news about that is that we have more supply coming onto the market. The buyers that have been waiting, well, you can call it as it is, but they have been pretty savvy if they thought rates would come down. And here's the break that they're going to get. We need to take advantage of that. Have the conversation with them, especially if you're out there this weekend. Open houses, flyers, marketing material. Have that conversation with your buyers because this is the time where you can make a big difference and generate a lot of business. If you have questions, please don't hesitate to give me a call. Woo! What a big number for our market today. We'll talk soon. Bye-bye.